Welcome back to another video. I know it's been a minute. It's been a good little minute since the last time I posted, but today I got a video. I'm gonna show y'all exactly how I trade. Trading only on the 1 minute time frame. Alright. So I'm gonna go over this briefly. I'm not gonna go into too much detail. But just kind of give you an idea. If you got any questions, leave a comment and I'll create a video on that specific subject, whatever you want to learn about. But the first thing, or one of the things, I'm not going to say the first, one of the things is to look for is an imbalance. What an imbalance is, or in other words, a gap in the market is when there is no wick on either side of the candle body. And when you have that, it's considered a fair value gap, or an imbalance is what is the term that I use, or a gap in the market. Basically, just space in between the candle. And how you will mark it up would be from the wick down to this wick. As you can see on each side of this green candle, there is no wick. This is considered an imbalance in the market. And these green candles are an uptrend, but that doesn't really matter, as you would draw it the same way in the downtrend. You would do it from wick, or in this case, you would do it from the body. And that'd be considered an imbalance in the market. When you have an imbalance in the market, you're looking for a price to retrace back into it before making its initial move, depending on your trade bias. All right. Second thing you want to look for is order blocks. Order blocks or is a candlestick formation, and this is what they will look like in the market. On the left side, you have up order blocks. You will more than likely see these in the uptrend, and on the right side, you have downtrend order blocks or down order blocks. You will more than likely see these in the downtrend. And essentially, how you would trade from, say, we're gonna go from the left side, the bullish, the uptrend order blocks. What you are looking for when you see this formation, the first formation. Um, Considering the fact that it's an uptrend and this is an up order block, so to speak, you will mark your zone once you see this formation from the wick high down to the wick low. And what you're anticipating price to do is to push from this level, retrace back into it, giving you your entry point, and then you'll be anticipating for it to continue the uptrend. Same goes for the other two patterns. In this case, you can just do from the wick down to the wick again. It'll just consume all of the bodies. But essentially, you're looking for the same thing. Price to push away, come back into it, giving you an entry, so it can continue an uptrend. And this is a strong bullish or order block because this up candle, this bullish candle engulfed this bearish candle or this red candle. But you would draw the zones. Well, in this case, you would draw the zone from the wick high to wick low of the red candle. And still look for the same thing. Look for price to push away from your zone. Come back into it, give you an entry, push away. Same thing with the bearish side or the downtrend side. You draw your zone from the green candle, wick to wick. Look for price to push away, come back, give me an entry to continue the downtrend. And on this one, you would just mirror this. Look for price to push away, come back, give me an entry so it can continue. And on this one, you would draw from wick low, wick high. Same thing. Look for price to push away, come back, give me an entry. Same old, same old. Now you're gonna see these patterns in the market all day, every day. And it's a matter of timing, patience, and discipline. That's it. Now this is what the candles actually look like. Now my candle colors are different than green and red. You can personalize it however you want. But this is the initial strategy. So this green, or not green, this blue area, I'm looking at the candles, would be New York session. Now, essentially what you're looking for is the first shift in the structure. And then you will look for your formations, the order blocks. And I'm gonna show you how you would enter and what you would be looking for exactly once you see the order blocks in the actual trend. So this is around what, 8:30. New York Stock Exchange is at 9:30, which is around right here. All right. So up in this area right here. Also, the order blocks can be called base candles. So when you're looking for it in a trend, you're looking for the order block to be invalidated, which in other words would mean the base candle is invalidated, giving you the signal that prices is wanting to reverse or turn around, depending on where you at in the market. So in this moment in time, well, after 9:30, we had a shift to the downside after being in an uptrend, making higher highs, higher lows, higher highs, higher lows, higher highs. When price closed below this point right here, it invalidated the order block. Now you may not be able to see it because the candle body is really small. This candle right here is it's called a doji. But nonetheless, you would still draw the zone out the same. Now, mind you, this order block happened in an uptrend. We're looking for it to get invalidated to look for sales. So in an uptrend, we're looking for our order block confirmations to go against the trend or for the trend to reverse. So when we're in an uptrend, we're looking for we're looking for sales, looking for the trend to turn around. When we're in a downtrend, we're looking for the trend to turn around. So that means we're looking for buys. We're looking for our order block confirmations to get invalidated. And then we use those zones as a point of interest to get in the trade. So right here we have this bullish order block, which would be this one right here. Just the body is really low. I mean, really small in price. Price closed below that lowest point, that wick point, and then it created an imbalance, which it has mapped out already because I have an indicator. It's an imbalance indicator. If you want that, I drop it in the comments. And the site that we're using to actually mark up the charts is TradingView, by the way. But we had that base candle invalidated because price closed below it. When price closed below it, it created a sell side imbalance or a downtrend imbalance. So in this case, what you would be looking for is price to push away from that zone as well as your imbalance zone. Come back into it or to push away again. Now, Our POI is this entire area right here, this imbalance zone right here. So once we get this closure below this bullish base candle, all we doing is waiting. It's a patience game. Waiting for price to come back into our zone, and then we're gonna take an entry based off of that. So when price came back to our zone, we would get in right here, and now you can set your stop loss two different ways. You can set it above the imbalance that the price tapped into, where your entry is, or you can set it above the most previous high or low, depending on what side of the trend you're on. In this case, it'd be the most previous high. And then you would target a 1 and 2 every time. No more, no less. Just as simple as that. You were barely in drawdown. If you would have caught this trade, you was in drawdown for maybe what, 2 candles. So again, we had an uptrend, which means we're looking for sales. We're looking for a price to turn around now. Our signal of the price turning around was when we had this uptrend order block right here, this doji and this candle right here. Let me zoom in some more. This doji and this up candle right here, this body engulfed this body. Up, it's an uptrend order block. When price closed below that wick low, that gave us our first signal. The price wanted to turn around. Our second signal of price wanting to turn around is it closing below the last higher low that created a higher high, which would have continued the uptrend. So once we close below that, that's our second confirmation that the trend wants to turn around. So again, after we close below this order block, it's a patience game. That's the first signal or the first sign that price want to continue in the way that it's trying to go. Second, close below this low, which is a change of character. The character is changing from a bullish trend to a downtrend. So once we got that, that's our second confirmation. Our third confirmation or sign that price is trying to turn around is a retrace, a pullback, whatever you want to call it, back to our zone. That's our third confirmation or our third sign for the trend turning around and for our entry. So at this point, we ready to enter. As soon as it gets into our zone, enter for a sale. Again, either put your stops above the imbalance that price tapped into or above the previous high or the previous low, depending on what side of the trend that you're looking for. And then you target a 1 and 2 risk to reward. Let it play out. The rest is history. All right, bet. Let's go to the downside. All right, now price transition. Get this out of there. We had our confirmation again. Oh, I preach on the 1 minute time frame. I trade only on the 1 minute time frame. I trade gold and I trade Nas 100. I've been thinking about getting into US 30, but that'll come later. I'll mess around with that later. But this is everything we're doing is on the 1 minute time frame. No higher time frame confluence is needed for this strategy. Okay, so now I didn't even realize I clicked it. All right, so now we got our transition based off of our first entry, which transitioned us to a downtrend. So now in a downtrend, what we're looking for? We're looking for price to turn around. So we're looking for buys. We're looking for our candle confirmation. Now, we did get it in this area right here, but considering that there wasn't a 2 candlestick pullback, which means that there wasn't 2 consecutive green candles that would pull back, going up temporarily and then going back down to continue the trend. We never got 2 consecutive candles. So all this area right here is invalid. We wouldn't look for a trade or our order block confirmation for the trend to turn around in this area at all. So we would wait again, created another down order block, created an up order block right here, retraced, two consecutive candles, and then we got this big engulfing down candle. Let me zoom in. We got this big engulfing down candle. Now, that's one of our order blocks that we want to look for. It's the downtrend order block. We're in the downtrend, so we're looking for downtrend order blocks to get invalidated, to give us our first sign that price wants to turn around, so we can look for buys. Now, in this area, we had a close above this down order block. Also, we had a close above this short-term high. And considering the fact that it's a two candlestick pullback, it's two green consecutive candlesticks, this is a true pullback. So in this area, not only did we have our order block invalidated, but we had another change of character, which means this is our first sign that the trend wants to turn around. And this is actually our first and our second sign happened at the same moment. On top of that, price created an imbalance, a buy side imbalance. Now in this case, it created two. Now you can play this one of two ways. Now after we get our order block invalidated and price changes character, and we get our buy side imbalance in this case, since we had a previous downtrend, now we're looking for buys to continue the uptrend. You will look for price to retrace into the imbalance before we get our signal to buy or to enter for a buy. Now you can play it one of two ways. You can get in off the first imbalance, or you can get in off the second imbalance. The choice is yours. Now, if there is multiple imbalances, I will wait for a candle confirmation signifying that the trend wants to continue in your favor, in this case in buys. So we have two imbalances. Say price came down to this one, and we have more than one imbalance. We're not going to count this one just yet, and I'll let you know why. We have more than one imbalance. Price tapped into the second one that was created. This is the second one. This is the first one. Here we will be looking for a green candle. This is just as simple as that. First green candle, because we're looking for buys. The first green candle that closes, you would use that as your entry for buy, and then again you can either put your stops below the imbalance that it tapped into, not at the line or not at the box, but below it, so a little out of it, or you can put it, in this case, at the previous low before the transition. So depending on how you enter this trade, you may have lost. So say you got, this would be your entry. This would be the entry one. You got your first green candle, put it right below the first imbalance that it tapped into, you would have lost on that second candle. But if you choose the entry variation of using your stop loss or putting your stop loss below the previous low and then targeting that 1 to 2, you would hit. Now every scenario is different. A lot of times when it taps into whatever imbalance that is going to reject from, there's a big push. So you will know right off the bat if it's a valid trade or not. If I can find another buy example. Oh, right after. This is why I didn't count it. I almost forgot. Right here again. Yes, we have the price transition right here to an uptrend, but we had price create another downtrend order block. Now, how you can use these in reverse is in the uptrend, you can look for down order blocks to get invalidated to let you know that the trend wants to continue. So we had the transition right here to an uptrend. Then price created this down order block. Then we had price close above this down order block, and it created a buy side imbalance. Now in this scenario, again, price is not always going to come back into it. You see, it pushed away. almost came back into it, and then it made its move. So again, in this scenario, you can play it. You can mark zones because it broke a high, a short term high basically, and then it came back down to retest, but it just didn't retest the imbalance. And actually, there's another imbalance right here that you could have called. There's actually two. The order the indicator, this didn't mark it, but there's actually an imbalance from here up to this candle. Let me zoom in so you can see what I'm talking about. There is no wick on either side of these two candles, from this wick to this wick. So if you caught that, there's three. Well, no, I'm looking at the I'm looking at the previous trade. So right here, there's two imbalances within itself. Bro, I'm tweaking. Hold on, that's below the one I'm talking about, G. My bad. Hold on, I'm tweaking. The imbalance from here. But nah, there's no wick from this side of this body candle after this down order block was invalidated. There's no wick from this side to this side of this candle. So essentially, you have two imbalances on top of each other right here. So again, it's simple. If you're gonna get in on the first tap, you wait until the candle close, or if you going to get in on the second imbalance that price created, then you want to wait for a candle confirmation in the direction of the trend that you're looking to enter. So on this, we're looking for the bullish trend to be continued. So we'll look for a green candle or an up candle. So as soon as that close, you can either put your stop loss below the zone that it tapped into, or the previous low, and then target a 1 or 2 every time, every single time. This one would now depending on how you got in on this one. Let me zoom out. You could have missed your entry. So it just depends on the setup and how you catch it. But I mean, right up in here, it's so close to your TP, you probably would have just took that anyway once you seen it start rejecting. So I mean, either way, it would have been a winning trade for you. But essentially, you want to target a 1 or 2 every time. Now I'm gonna reiterate before I end the video what I look for in an uptrend. I look for a reversal. My signs of reversals is a bullish order block being invalidated, structure being broken, and a retracement back to an imbalance created after the base candle or the order block has been invalidated. In the uptrend's case, a bullish order block. So after the bullish order block has been invalidated from that zone, the retracement back to that zone. That's what I look for. In the downtrend, it's the same thing, just in reverse. In the downtrend, I'm looking for a reversal to the upside. Looking for down order blocks to be invalidated. And then after that, I look for a buy side imbalance. And after that, I look for price to push away and then come back into my buy side imbalance before looking for an entry on the trade. You target 1 or 2, you let it play out every single time. And yeah, that's pretty much it. That's all I look for every single day. And as you can see, I'm a mark how many setups we would call this trading today. All right, we got an uptrend. We got a down order block right here. They got invalidated. Price closed above it. Down order block is this area right here. This engulfing and this small candle. That's the down order block. Price closed above it. Use that zone from the order block. Also, we have buy side imbalance right there. So in this scenario, I would just wait for it to retrace back into the order block that was invalidated before looking for an entry. The stops below, and that 1 to 2 would have been hit quick. So you could target a high. That would have been a 1 to 3, or you could have just trailed it. As long as you don't get, you feel me? How I would trail it is once my 1 to 2 is hit, I just trail it by the wick. So in this case, my 1 to 2 is hit on this candle right here. So I will put my stop loss right here below this red candle. And if price don't close below or come to that, then I'm still in the trade. So it closed green. I would have moved it up a little bit to that bottom, to that the body at the bottom. But then on the next candle, it would have came out and tapped me out. So I still would have got, you feel me, at least a 1 to 1.8. But in most scenarios, the trend is gonna continue. Something like this. Once you get your entry off of this, matter of fact, we can go to that. It's actually an entry over here. So we had right in this area, down order block created or invalidated after it was created. You got a zone, price moved back into it. And that's your entry right here. Price closed above this week high. That was the short-term high that it broke. With a march zone, it also created a bullish order block, which is added confluence that it wants to turn around. Try your zone, wait for price to come back. Price came back on this purple candle right here. This down candle. That would have been your entry. Put your stops below. Target 1 to 2. 1 to 2 would have been here on that. Wouldn't have been in trade for that long. What's that? 6 candles? That 1, 2, 3, 4, 5, 7, 7, 8. And in this, you got another entry. Down order block. Invalidated. The zone mark. Price pushed away, came back into it. Enter. 1 to 2. The buy side imbalance was real small, so I didn't really mark it off. Real small. So you could have got in when it tapped that, put your stops below, or just when it tapped the zone that it invalidated, put your stops below. Either way, stops would have been around the same. The stop loss would have been around the same anyway. And then after this uptrend, price transition. We had our up order block invalidated, waited, broke structure. This was the short term high that it broke after this one. So this was the first one. That was the second short term high, which was added confirmation that the trend wanted to continue. But going back to this, we had this up order block invalidated. Structure was broken. Retest back into it. Either entry off the or stop loss at the high or but at zone 1 to 2. Straight like that. Now, still in the downtrend. Here's a up order block right here. Remember up order blocks, we would draw the zone from here. And easily, we had the up order block invalidated in the downtrend, which means the trend wanted to continue. Then we had this small, well, nah. In that scenario, we didn't have an imbalance. Nah, I came to fill that in right away. Yeah, it came to that zone and just rejected. So you didn't really have to look for it that in this scenario because of the leg of structure after the up order block was invalidated. It wasn't that long for it to actually move away and come back into it. It was just a big engulfing candle. So it came basically filled in this area and then rejected from it. So that would have been another entry off the top of that. top of the zone, 1 and 2, straight like that. Now we have a downtrend, transition again. We already went through this. Same thing. Down order block after in the downtrend, invalidated. Structure high, short term high, invalidated. Or traded through. Buy side imbalance. In this case, it created 2. And if you're going to get in on the first one, or whichever one it taps into first, you will wait for a green candle to close. And then you would get in for your entry. So in that scenario, we got it right here. And depending on how you want to trade, you can put it below the zone. In this case, you probably would have lost it if you'd have put it right up on it. Or you could have put it below the low, the last low before the transition. And then target 2 to 1. What's that? It was like 5, 6, 7 trades. And it's only, by this time, when this came out, it was 10:48. So from 9:30 to 10:48, what's that? What's that? 9:30, 10:48, hour, 18 minutes. You already caught 7, 8 setups just from trading, looking for these 3 things: an imbalance, an order block, invalidated, and change of character or a change of trend, a structural low or high being broken. And that's it. 1, 2, 3.